Hi, this is Kerry Artek with Wicked Stocks bringing you the Daily SPY Report for Friday, January 28th, 2022. Before we take a look at the charts, just want to encourage you to please click like each and every time you watch the Daily SPY Report. It does help us out a great deal with regard to the search engine results that we get on YouTube. And also subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the Daily SPY Report, and seeing it before the opening bell is certainly to your advantage when it's fresh, relevant, and usable for your trading and analysis. So let's take a look at the charts. We did a week ago today, last Friday, close below the 442.07 channel bottom. That did set off a 3 to 5 week sell signal into the 390s. I've since amended it to 2 to 3 weeks. I think that's realistic given this heightened volatility that we can, over the next few weeks, continue south into the mid to upper 390s. So that is really the big picture. And we've been testing the low 440s, at 442.07 channel bottom, quite a bit this week. We pushed through it in a meaningful way on Wednesday by a couple of points. We rallied to within a half a point of it on Thursday. It's held each and every time. And not until we close above that formation do I see a case to be made for at least a good low. Well, how should I say this? I think that there'd be a good quarterly low. I don't think we would revisit those lows that we put out, what was that, Monday, anytime soon. But we could have trouble in the mid 450s, which I'll get to in a moment. But first, let's take a look at the kind of the close-up view here of 442.07 and the downward pivot point today, and also our daily support level. They're both really is below the market at 428.08, and it's probably better to just show you in a 30-minute chart where you can see sort of the rotational highs and lows and the validity of that formation. 428.08 able to contain daily selling pressures. If we break 428.08, the 420.76 low from Monday is likely to be tested. And if we close today below 428.08, I think that we could, by the end of next week, actually continue south into the targeted 396.89 to 399.41 area. That is a long-term channel bottom, almost 2 years in the making, that can contain annual selling pressures. And once tested, we can not only rebound nicely, but recover all of our losses over the next 3 to 5 months or so. That's just an estimate. Now, I did have a question posed to me on YouTube last night in terms of could you provide the downward targets in the event we actually do close below 396.89. It's almost a moot point right now, but I'll tell you anyway that if we do close below 396.89, there is a long-term channel top that we settled above over a year ago that is presently at 365.54, and that could be realized in as little as 2 to 3 weeks, depending on volatility and circumstances, fundamentals on the ground, or it could take the better part of 2 months, depending on really what's happening with volatility and facts on the ground. But 365.54 is a long-term former channel top that can, if tested this year, contain not only annual selling pressures, but I think quite possibly through the rest of the decade. And I'll also let you know that if you watch the weekly IWM report this week, we actually this week tested that same formation on the IWM, which is closer, obviously, to the price levels in the IWM than the SPY is in terms of its proximity to that same formation that it has. And when I say that same formation, I'm talking about the 2009 low against the 2020 low as a trend line projected off the intermediate high, the more recent high from earlier in 2020. So there's all that. That becomes an objective if we close below 396.89. But I'm not anticipating that. I am anticipating 396.89 to 99.41 over the next few weeks. Let's take a look at the support and resistance for today. 396.95 above the market can contain intraday buying, initial buying, and below which we should actually test that 428.08 short-term channel bottom today, where we can place a daily low. As I said earlier, if we break 428.08, expect the 420.76 low from this Monday, a week ago, 5 days ago, on an intraday basis. And if we close below 428.08, 411.67 becomes a 2 to 3 day target. And we should, by the end of next week, over the next 3 to 5 days, actually continue south into that targeted upper 390s long-term support. Upside today, if we push or open above 436.95. The 442 handle is expected again, and that is 442.07 on the daily chart. That channel bottom we settled below a week ago today. And on the weekly chart, you have to throw that in there as well, 442.76. So it really is almost the entire 442 handle that is our significant ceiling. And if we close above it today, being the end of the week, above 442.76, back above that formation, I think we actually have a good low for the quarter. Possibly into later year, but it's a little early to say that. But I do think that could be a good low through the rest of the quarter, which is really just to say through March trade. We could fall back. I just think the low is probably in. And the next target, if we close today above 442.07, is that former channel bottom at 457.14. And that would be about a 3 to 5 day rally. And I'll mention this too. If you watch the daily Triple Q report, there's a descending speed line in the mid 350s that, if settled above today, would signal the mid 370s. And so this is where comparing the two is a valid approach. Because if we get the settlement today above 442.07 and in the Triple Q above the mid 350s, I'll let you watch that. And the mid 370s are expected in the Triple Q, and the mid 450s are then expected in the spine. The mid 370s in the Triple Q is much more significant. That is an area that can contain Triple Q buying through February, and we could fall off from there. And so that's why I'm giving ample respect, this is a long way of saying it, to the 457.14 former channel bottom. We could close above 442.76, which is the weekly channel bottom that you're seeing on the daily chart here at 442.07. If we close above that area, 457.14 expected then by the end of next week or sooner, where we could top out through the following week and from there fall back for a week or two. We could get into a real heavy consolidated framework then as we continue into February trade that could go on for a week, 2 or 3. It is the settlement above 457.14, though, that tells me that price acceleration to the upside is likely to play out into later February. And I would then anticipate within about 3 to 5 weeks, really roughly the mid 490s as a target if we can get back in above 457.14. But I'll also say that if you are long puts right now because of the sell signal a week ago today below that 442.07 channel bottom, merely closing back above that channel top today, I think is sign enough to liquidate that. That would be my opinion. Now, you could watch the market rally into the mid 450s next week and perhaps fall off. That would be your call entirely. But I think closing above 442.76, which is the weekly version of 442.07, would be sign enough to liquidate out of the money puts. Until then, this market should continue into the upper 390s over the next few weeks. Let's finish up with the support and resistance levels that I'll leave you. You can print this off your smartphone, off your desktop. Please click like each and every time you watch the Daily SPY Report and subscribe to the Wicked Stocks YouTube channel. I'll be back Sunday afternoon for Monday's Daily SPY Report. You have a great weekend.